Dorothy, we all set? Ugh. Who do we call to see who we need? Oops. Apologies, everyone, for the short delay. We're just waiting for somebody from legal to come. Well, good morning, everyone. That's okay.
Yeah, it was just the audit committee part for the financial statements. That's it, yeah.
Good morning, everyone, and welcome to the Audit and Finance Standing Committee meeting of August 20th, 2025. The Halifax Region Municipality is located in Mi'kma'ki, the ancestral and the traditional lands of the Mi'kmaq people. The municipality acknowledges the peace and friendship treaties signed in this territory and recognizes that we are all treaty people. It's called Order and Land Acknowledgement. I would ask now for the approval of the minutes of June 18, 2025. Councillor Gillis, seconded by Councillor Cleary. All those in favor, please signify by saying aye or raising your hands. Opposed, nay. Motion is carried. Approval of the order of business and the approval of additions or deletions. Madam Clerk, do we have any?
No additions or deletions have been received by the clerk's office.
Thank you. So we'd ask for a motion to approve the order of business. Councillor Gillis and Councillor Cleary again. All those in favor, please signify by saying aye or raising your hand. Motion is carried. Business arising out of the minutes, there is none. Call for the declaration of conflicts of interests. Seeing none. Motions of rescission, there are none. Motions of reconsideration, there is none. Consideration of deferred business, there is none. Notice of table matters, there is none. Correspondence, petitions, and delegations. Madam Clerk, do we have any?
No correspondence or petitions have been received by the clerk's office.
And petitions? No petitions. We move now to presentations and welcome Matt Stickland, who's come to speak on HRM's budget reconciliation assessment frameworks and sinking funds. So Matt, you're very familiar in that you have 10 minutes to present, and when you're down to the wire, Dorothy will let you know. And I just wanted to confirm that your presence here is not as a journalist, but as a resident. Could you please confirm that, please?
That is correct. I'm speaking as a resident of District 2, and I'm just in a position where my job gets me in front of a lot of municipal reports, and I just think a lot about the city. But I'm speaking today as a resident, not professionally.
Thank you so much. You're welcome to proceed. You have 10 minutes.
It's up on my screen. There we go. So my name is Matt Stickland, and I'm here to talk to you about fiscal sustainability. I'm, as we talked about just now, a resident of District 2, and I'm also extremely concerned about the fiscal cliff we are in the process of driving off as a city. So in this presentation, we're going to talk about how bad Halifax's fiscal sustainability is, how we got here, and what we can possibly do to fix it. And to be clear, the city is already doing a lot. This presentation has taken a couple of forms so far. At first, it was going to be a presentation to CPED, where I was going to suggest that perhaps since the commercial ratepayers pay significantly less than our small businesses downtown, we used the clause, I think it's 98 or 95 of the charter, to tax commercial businesses based on their land use and yada, yada, yada. But that's already, that came as part of Mayor Fillmore's motion for budget reform. Part of what I was going to talk about is that our fiscal considerations need to be more holistic and consider, yeah, we're saving money on taxes, but is it costing me as a taxpayer more? And 2 or 3 meetings ago, regular meetings of council, the CAO said that including that type of affordability analysis is already happening in staff reports. So I think this is in line with what the city is trying to do anyway. So I hope that at the end of this or at some point in the near future, you ask staff to update their reporting to you about the fiscal situation in the city, but we'll get there. So Halifax's unsustainability is pretty bad. You can see from 1900 to today, this is the median revenue per properties that Halifax generates, which is not in and of itself bad if we're not building a lot of properties, but if we grow and build more properties, earning less from them is very bad, because then we're building more, we have more people here, and we are earning less money as a city to pay for the services that people need. Now, you guys do have tools. The tools suck a little bit, I understand that, but you do have tools: property taxes, area rates, sinking funds, user fees. Those are kind of like your main tools. You can use them all. However, this problem has been made worse by using those tools to increase services and keep taxes low while also keeping fees low. So can anyone tell me whether or not increasing the amount of services needed while decreasing your revenue and then artificially limiting your tools is good for the city's fiscal future? I would say no. So, how bad is it? We've needed more services, and we've spent the better part of 50 years building out massively inefficient revenue-generating properties to maximize expenses and minimize income. Then, for the past 12 years, we've deliberately underspent to lower the tax burden. We now have $2 billion in needed capital infrastructure with no obvious way to pay for it except borrowing. And borrowing, as we all know, costs interest, which goes to the general rate, which means borrowing is higher taxes at some point. Next year, 9.5%. And the property tax system is unfair. It is fundamentally unfair. It's been unfair for as long as the city has been studying this, which goes back to 2003. And on top of that, council just makes bad choices about land use and how to use their fiscal tools. So all of that combines to a bad time. How did we get here? So this slide is 3 quotes. The first one is from CFO Jerry Blackwood, who during this budget season told you guys being council, that pulling rabbits out of a hat is no way to do a budget. And a couple meetings ago, Councillor Sam Austin said, we don't live in a vibocracy, but oh boy do we ever. Because our fiscal choices are not at all related to our fiscal realities. And I don't know what you can call that, because it's not good fiscal management, and it is definitely vibes. And if vibes fund our city, then we do, in fact, live in a vibocracy. Councillor Janet Steele was another inspiration for this presentation. 9.5% is a lot this year. When are we going to talk about our property tax increases? All the time. Every report is when you should be talking about it. Every single thing you do impacts how much money the city earns, how much money it spends. It increases or decreases affordability, and it increases or decreases sustainability. That should be in every single report, the fiscal implications of your decision. It's not. For example, last Monday's Northwest Community Council meeting, the fiscal implications, there are none. There are no fiscal implications for development because it's not going to impact the budget this year. So I ask you, is it possible that councillors keep trying to pull rabbits out of the hat, fiscally speaking, because your reports say, oh yeah, we can do it. There are plenty of rabbits in this hat. There is no impact on our rabbit capacity this year in this budget. Your staff report process encourages, or at least doesn't prevent, magical fiscal thinking. Because there are a lot of fiscal implications for every single development. Here is a list of 8, a non-exhaustive list of 8 municipal studies going back to 2003. Now, I don't know what the fiscal implications of that development is, but I would suggest that sustainability, it decreases a little bit in transportation, but due to the volume of units on the property and the affordable units in the property, you probably increase affordability for the city, you probably increase sustainability for the city from a property tax perspective, but you increase the cost of your transportation. Was that laid out in your report at all? No, not really. And to be clear here, the city has a lot of information, and staff could spend probably decades on each individual property and weighing out the pros and cons. At some point, the assessment of the trade-offs that you're making are not worth it. I don't know where that line is. I suspect you don't either. I suspect staff very well know where the line between not enough and too much work into this is. So I would suggest talking to them and being like, hey, we need more information. You don't need more work because we don't want to hire more people because we don't want to raise the tax rate. So what is the easiest way you can give us the implications of our decisions? This is my favorite, personal favorite. This is from the community area rate report where staff are suggesting that we switch the Canada Games Centre to the community area rate. And they say that the framework for area rates will not directly affect the size or scope of the overall HRM budget or finances. Well, I bet you 9.5% in tax increase next year that there were some pretty serious financial implications for this fiscal area rate policy. Because if you take the Canada Games Centre out of an area rate and you put it in the general rate, you then need to raise the general rate to pay for the Canada Games Centre. But if you take it off an area rate, put it in the general rate, and then keep the general rate low, what you've functionally done is defunded the Canada Games Centre, which has massive fiscal implications. And this policy allowed you to put more things on the general rate. And your staff reports don't generally tell you that, hey, just so you know, we've been putting more and more things on the general rate, so you need to raise it. And what they say instead is, hey, relying on the general rate is kind of an issue, so we need more user fees. And again, for the past 10 years, we've been making bad choices with the tools that we had. 12 years, really. 10. So How did we get here? Our over-reliance on inadequate revenue, we have an over-reliance on an inadequate revenue source. We consistently make political decisions to continue or exacerbate the over-reliance and its associated negative outcomes. People hate the outcomes, but support the political decision to exacerbate the reliance on property taxes. What that means is I hate the fact that I have to spend more money on transportation, but I also hate the fact that I have to increase property taxes. I hate both sides of this, which means you are in an impossible position politically, and that sucks for you. But that's why some people run for office and some people don't. Can better reports fix our fiscal woes? Maybe. Maybe not. I don't know. Because at a certain point, you guys are humans and you make decisions based on the incentives in front of you. But I think with more context, a lot of you would make better decisions. This is the example from earlier with the Northwest Community Council. If the implications of most people in that meeting got there. They were like, yeah, this is making it more affordable, whatever. But it should be in the staff reports. There's no reason it couldn't be, I don't think. Unless it's like a crazy amount of work that I'm completely unaware of. But I'm able to do this in not a lot of time, and I have the same type of corporate knowledge as staff does, so I would imagine it's, or should be, as easy for them on the assumption they're as competent as I am. And we talked about the area rate. I went into this a little bit early, so we're just going to fix this slide. But essentially, if the staff report doesn't mention that you've put things on the area rate, so then you then need to increase the area rate. Like if no one tells you that you need to increase the general rate because you were relying on it more, then you just don't do it. And we don't do it. Haven't for 12 years. So fixing staff reports is one thing. Can we fix our maps? I think our tax map is very poorly laid out. This has been brought up before at meeting. This is what we use currently. This is our tax map. So that's the pro. We use it now. That's good, I guess. The cons, it's somewhat arbitrary. It's based on like rural paving standards, for example. It's got dated assumptions about municipal expenses. This is the map that designates the tax rate, but it has no relationship to the municipal expenses or revenues needed for the areas it taxes. Yeah, so is it good if our revenue map is not at all related to our income map or expense map? Probably not. Should we fix that? Should we align that better? Yeah, maybe. But just kidding. There is a fiscal relationship between the tax map and our development patterns, and it's known as, oh my God, 30 seconds, the suburban Ponzi scheme. And this is really hard for you, and I understand that, because the people who can afford to pay property taxes are moving back into the city, and the people who can least afford to pay property taxes are moving into the suburbs. But at the same time, the suburbs are incredibly dependent on subsidies. So now you have a bunch of people who can't afford to pay the difference between the suburban subsidy and the cost to provide services to the city, which means you also can't really raise property taxes on the sub. Like, this one is very complicated. It's very nuanced. There's a lot of things here. And also, we can use sinking funds or area rates instead of just relying on the general rate so much. That's 10 minutes. And if anyone has any questions, I'm happy to answer them. But yeah, I think you should ask for better reports at the very least.
Thank you very much, Matt. I appreciate the energy that you bring to your presentations. I see no names on the list, and so we will move on now to public participation. Now, as of 4:30 on Tuesday, August 19th, there were no registered speakers for this meeting, and therefore there were no public participants, but we do ask 3 times if there's anyone in the gallery that would like to speak. If there's anyone from the gallery that would like to speak. 3rd and final time. Anyone from the gallery? So seeing none, information items brought forward, there are none. We move now to 13, which is our staff reports. And first one is the investment activities for the quarter ending March 31st, 2025. Councillor Hinsby, did you want to read out the motion? Sure.
The Finance Standing Committee forward the staff report dated July 31st, 2025 to Halifax Regional Council as an information item.
Moved by Councillor Hinsby, seconded by Councillor Killis. Any discussion or question? Councillor Cleary.
Just a quick one, more for the public who, maybe all 4 of them watching. And so when you're looking at this and we look at the budgeted amount for the entire year, we're still doing well. If you look at just the last quarter, we're not making as much money as we had budgeted for this particular quarter. I'm assuming that's because interest rates have come down recently. Just quick update on how do you think we will fare given the situation, given our budgeted amount by the end of the fiscal year? Will we still be on budget?
Aaron McLean, Deputy Treasurer, through you, Madam Chair, to the Councillor. Are you talking for the last fiscal year, or are you talking for this current?
This coming fiscal year, so we're only not even halfway through. But,
Right, exactly. So I think we've made adjustments to how we are going to budget things. You are correct, where interest rates came down versus, and a little bit lower cash balances. So the quarter Q4 was a little bit lower than we expected versus Q1. We are making changes to how we do the budgeting this year. So what I can say is, so far through Q1, we're on track to meet our budget amount.
Okay, thank you, appreciate that.
Thank you, Councillor Cleary. Thank you very much for that response. Seeing no other questions on the list here, call for the question. All those in favor, please signify by saying aye or raising your hands. Nay. Motion is carried. Thank you very much. Appreciate your time. We have no motions. We have no in-camera. We have no added items. Notices of motion. Is there any notices of motion from members? Seeing none, the date of our next meeting is September 17th, 2025. And we had asked for a motion to adjourn. Councillor Morse at 10:26, we adjourn. Thank you very much. And thank you, Karen, for pinch hitting. Thank you, everyone. Have a great day.